Andrea Leadsom.
Thank you. That all seems to me to be a little bit depressing, actually. I feel we're slightly talking, perhaps, ourselves into a long, dark tunnel from which there is no exit. I mean, on the one hand, you're saying we've used up all our get-out-of-jail cards in 2008. On the other hand, you're saying that we've no influence over Europe and all we can do is look to our own issues. You're saying that we've got the accounting completely wrong. So surely, I'd just like to push back a bit. Surely we are a member of the EU. We do have a say, in fact, over certainly things like the EFSM as to whether that is used or expanded. We would have to have a say if the ECB was going to try and issue Eurobonds. Presumably there's also potential contingent proposal that the ECB starts doing asset purchases of impaired debt from the banks like they did in the US. There's all sorts of possibilities that Britain should and could have a view on. There's also the possibility that we change the accounting rules and say that banks and sovereigns now need to mark-to-market the debts that's on their portfolios and indeed make provisions for it. And we could even start playing hardball with the ratings agencies and start looking realistically at whether the ratings agencies are getting these things wrong. And we've already discussed the fact that it's ludicrous to think that America is anything other than AAA, since it continues to have the means and the desire to repay its debts, and to sort of rank it the same as Italy is utterly ludicrous in anyone's book. So, I mean, you're effectively throwing up your hands in despair. Is there no scope for any of these possibilities? Should we not be doing something with our Eurozone partners?
Well, we can certainly try and advise them. I think that what should have happened is what the chairman of the IMF, Madame Lagarde, actually proposed, which was that there should be recapitalization of the banks. And if the banks, particularly in the continent, were recapitalized to a degree that would protect them against the kind of revaluation of sovereign bonds that you were suggesting, then I think that the likely dangers from a potential default in Greece, or even more widely, would be much reduced. And the real problem is this interaction between sovereign debt and the banking debt that William was talking about.
So just to interrupt you, Professor Goodhart, should we, as a Treasury Select Committee, with all the influence that we have, be saying to the ECB that it should be requiring all banks henceforth to mark-to-market their sovereign debt, as a strong recommendation from this committee,
You cannot properly and helpfully do that unless that is accompanied and indeed, I would argue, preceded by an appropriate recapitalization of the continental banks, so that when there is this revaluation, they are still in a good, strong, solvent state. The problem about revaluation through a mark-to-market of all sovereign debt at this moment is that I don't know, I have no idea what the figures would be, but I would not be confident that there would be a sufficient overall majority of European banks that would actually now be in a position to stand that.
I mean, we are where we are, so the ability for banks to kind of get out from under the rug or to sort of escape things is severely limited. I mean, it's almost impossible to hedge exposure. The volume of some of these exposures is so major that people...
But would you not agree that transparency, actually knowing where the problems are, we're all talking about it's terribly interconnected, nobody quite knows how much, and banks are very nervous. Isn't therefore transparency the answer? Isn't knowing what the problem is part way towards solving the problem?
Well, I think if I don't think total transparency introduced in the middle of the crisis would be necessarily a good thing.
Okay, but can I just challenge you on that? Because a long time ago, Margaret Thatcher said you can't buck the markets. Just recently, Angela Merkel said the European Union politicians will not follow the markets. That seems to me like there was a fundamental disagreement there, and I think Margaret Thatcher was proved right. And surely now, for politicians to be sort of saying, well, we're just not going to do what the markets want, is surely just a challenge to the markets that we simply can't afford to meet. So to say that, to change tack now and go for transparency isn't going to solve anything, what is going to solve anything then? What can we recommend? What steps could we take to try and prevent the crisis that is almost certainly going to hit us within the next few months?
Major recapitalisation of those European banks that need it.
And how do we identify that without the required transparency to know exactly what their market position is?
The internal regulators will have sufficient information. They do know the information. They know what each bank holds. They can apply mark-to-market accounting for themselves. They're in a perfectly good position to do that.
Okay, well, that's
Professor Parry?
Yeah, I broadly agree that if the if the German and the French banks have not made adequate provisions, then it's sort of, or if they've not been cautious enough, then it's certainly what they're doing is understood by their own regulators. So that if the regulators, they will see, what the practices are. They can easily investigate that.
Okay, well, we've got that
So
point on
can I
board.
just make one other, on a slightly different tack, which is what do you think the impact is of Britain's holding back from the fiscal problems in the Eurozone and not jumping in and bailing out? What impact do you think that will have on the Eurozone's approach to Britain in the future?
Well, I guess the UK has made contributions in helping Ireland, makes contributions through the IMF, and so it would seem to be surprising for the UK to be assuming substantial fiscal burdens to rescue the Eurozone.
Andrea Leadsom wants to
I just
pop in
want
there.
to challenge you on that, Professor Peregrine, because you say they're not cheating, they're not doing anything wrong, blah, blah, blah. But if we roll the clock forward a couple of years, are we going to be sitting here saying, right, so is no chief executive of a bank going to go to prison for the fact that they were falsely accounting during the latest crisis? I mean, surely there is the playing by the book of, well, we don't have to market, and there's the stating the bleeding obvious, which is that if we've got a crisis that is very real and could be tomorrow, could be next week for all we know, would it not be the prudent position of a senior executive in a bank to say, right, we need to start marking to market and making provisions against sovereign default? Would that not be the prudent position? And if we get 2 years down the line and they didn't, and we do have another banking crisis, are they still going to walk away scot-free for not making that prudent decision?
Let's just have an answer to the first of those two questions, because we might be able to hand in whether they get away scot-free, but let's just...
I think, they are taking advice from their accountants, and then that should all be visible to their supervisors, what their policies are. So I don't regard it as I don't think that if somebody does that in a way that their supervisors kind of sign off on, then that they should then be that they're then guilty of some offence.
No, but as I say,
one quick further example.
There's the book. There's the doing it by the book. This is what my regulator told me to do. And there's the prudent director's competence requirement that says to you transparency and marking to market in this market environment is absolutely essential, isn't there? There's those two things. And it seems to me that what you're arguing for is, well, rules is rules and we just did what the rules said. And what I'm saying to you is, would it not be better for senior people paid a huge amount of money, don't forget, an awful lot of it being paid at the moment by the taxpayer, is it not the case that they ought to be seriously looking for prudent reasons at what they should be doing with marking to market on their portfolios?
But the regulators ought to be requiring them to do the prudent thing. Let me try and put it in more colourful language. If you want the banker to go to jail in 2 years' time, I hope you will ask that the regulator will go with him.
Thanks, yes. Just a very straight answer from each of you, if you could. Are we beyond the stage of being able to prevent a crisis, yes or no?
I'd say that we're in a crisis already, so...
Yes, sorry, I should be more specific. My definition of crisis is either a sovereign default or a massive change in the structure of the EU. I mean, that to me would be the crisis. We're in a crisis period now, and what I want to know is there any combination of policies that could avert the inevitable crisis, do you think? Yes or no?
Yes, I think that there is. So I'd say that the most immediate one would be to do with restructuring. You can have hard defaults and you can have soft restructurings, and the soft restructuring route is still open and still being explored. And
can Greece stay in the euro currency group under those circumstances?
Yes, I think so. On our assessment, if this second programme is successful, if the private sector involvement comes on track as they hope, then it takes Greece from being clearly unsustainable to being borderline marginally unsustainable. And so, you've bought yourself some probability of getting through this, I think, but still with a big risk that you don't, and a hard default certainly is still on the cards.
Okay, so you're effectively saying that you might not be able to prevent it, but there is more still to be done?
Yes.
And Simon Tilford, what would you say?
Starting from where we are now, with the current policy mix or current strategy for dealing with the crisis that we have, I think it's unsustainable in its current form. And that won't just be Greece and Portugal even, that'll be more.
And Jan Randall?
I think essentially, even though this crisis morphs and its ricochets from the origins back to 2008, it is essentially manageable. I think what's wanting is policy coordination, having the right institutions, deal with the situation. Sometimes markets, expect and demand certain things to happen, but politics works, and policymakers work on a different, slower body clock. And sometimes things aren't realised until they're very clear for everyone. And I think certainly the Greek situation, default is more often than not in a decision made by creditors, whether it's sovereign or corporate. They decide who. They precipitate the default by not rolling over the money, and they stop the financing. That could still yet happen to Greece, although I think Berlin and the others are fully aware of the consequences. And if it was just Greece, they would probably do it sooner rather than later. But the problem is contagion, and that's where the ECB needs to come in as a backstop. I think if they Greece is going to be given enough time because structural adjustment requires that before you see any kind of genuine results. I think if the ECB is given greater powers to intervene, full license to act as a lender of last resort in all respects, that would diffuse, for me, the bond market crisis. But it doesn't diffuse the underlying crisis to do with the Eurozone. They would have more time to deal with that, but that would be a separate challenge.
And how do you see the ECB being given the powers to act as lender of last resort? The technical, how is that going to happen from where we are today?
Well, it's happened already. Jean-Claude Trichet reopened the bond buying programme on August the 8th, while all the politicians went off on holiday. To be fair, Angela Merkel and Sarkozy provided a signed letter to Trichet to handle all financial matters in full confidence while they were away.
With a ceiling, but with a ceiling, isn't there? There is a ceiling, and that ceiling isn't big enough to... if the markets want to test that ceiling, then it won't be high enough, will it?
Yes, this is it.
So it's not really a lender of last resort, is it?
They know that the ECB is half-hearted about this.
Yeah. And
the ECB should be determined. It should show the nuclear button and say, look, we will, and convince the markets that they will.
But how can the ECB be a lender of last resort if it doesn't have the power to be a lender of last resort? And how will it get that power if that's what it takes to avert the crisis?
It's a good question. It's up to the owners of the central bank, the sovereign governments, and most important is Germany.
And that, presumably, will require some sort of new treaty. And that's certainly not going to work in the time frame of the markets, is it? I'm just trying to get to the bottom of, is that a realistic... You're saying that's the solution to prevent a crisis.
Well, I'm saying it's part of the solution. We have, I see a central bank that's not up to the tasks, the challenges that the Eurozone presents itself as. We're still seeing a central bank moulded in a 70s, 80s environment of West Germany, and that was suitable then. Now it's obviously bigger, but its mentality and thinking is still very much of a medium-sized, efficient export engine, powerhouse called Germany. The challenges of the Eurozone are much, much greater, and I think it needs commensurate powers and policies to deal with that.
I have to say, I mean, you're sort of partly saying it's preventable, but I'm not kind of getting any real handle on, so what should this committee be recommending happens, and recommending that the ECB becomes a genuine lender of last resort with, complete right to obligate the entire EU membership. It's just so badly not going to happen in the time frame. So short of that, what else could be done to avert that crisis? I mean, is there anything that we as a committee should be recommending, in your view, that is done now to avert a significant crisis?
I think there is the unfortunate truth is that you can do relatively little. We're not in the currency union. We're not participating fully in the European Financial Stability Fund. I understand personally the political reasons for that. But we have limited say over these decisions. Now, clearly, we're going to suffer huge collateral damage if and when the Eurozone crisis really blows up. There's no doubt about that. Given that we can't really influence policy making within the Eurozone, we have to concentrate on trying to
We can influence banking, though, can't we? We can influence bank regulation to a decent extent. I mean, is there anything we could do
in the time frame necessary and in the ways necessary? I'm not sure.
And recapitalising of banks, forcing them to market their sovereign debt and so on.
I mean, the Chancellor of the Exchequer has been quite outspoken on the need to recapitalise banks, in particular Eurozone economies. He's also come out in favour of some kind of fiscal union. For a relatively Eurosceptic British Chancellor, that was quite a step, and it shows. I mean, I don't know what they can do beyond that. I mean, that's quite a shift. He's basically saying, okay, we're not part of it, but in order for it to work, you're going to have to become much more integrated. That's not something one would necessarily have expected from a relatively Eurosceptic Conservative Chancellor of the Exchequer. I'm not sure what they can do beyond that. They can back IMF calls for recapitalisation of banks. I mean, what would be very useful, but of course the British government is very poorly placed to argue it, is to highlight the risks of uncoordinated and excessive fiscal austerity. But of course, the UK position on that it's a difficult one for us to argue. I mean, of course, our position is different. We've had a big devaluation of the currency. We have our own central bank. We have very low interest rates. We have a central bank that can print. So the risks of our tight fiscal policy are much, much, much less acute than the risks of such policy are across the Eurozone in economies with similar imbalances to our own. But nevertheless, it's a tough argument to make. And I think, like it or not, all we can do is concentrate on trying to bolster our defences. Now, our banks are, as a whole, better capitalised, but we have to ensure that they do have sufficient buffers to absorb what is likely to be coming. We do need a strategy for economic growth. I think there needs to be a conversation about whether, for example, it makes sense to be slashing capital investment in this climate. When investors look at the sustainability of the country's fiscal position, they're really not bothered about the next 18 months to 24 months. They're bothered about the long term, and one of the things that affects our country's long-term fiscal position is its growth potential. Slashing investment in a country with very, very outdated and poor physical infrastructure from an already low proportion of GDP to next to nothing, I think is unwise and does nothing to underpin confidence in our public finances. So these kind of things. I mean, I'm afraid all we can do is concentrate on strengthening our own economy, making ourselves less vulnerable to this.
Okay, Simon Hayes, do you have anything to add to that?
Not materially. I think that in the near term, the main thing that's required is that markets see that there is sufficient firepower behind bond purchases, for instance, to ensure that Spain and Italy continue to be funded. I think that that's more likely to happen in an incremental way in terms of there will be crises and that will force euro area governments into upping the size of the EFSF, for instance, but there's nothing that the UK really can do to influence that beforehand. So no, I agree. I'm not sure that I think that the UK's defences are about as bolstered as they can be, in that the sorts of crises that really would have a very significant effect on the UK economy, I think are things like breakup of the euro and much more dramatic sovereign debt crisis through bigger countries. And I really don't see what the UK government can do to materially influence the likelihood of those things happening.
And just one last quick question. Do you think that if there is a default or if there is some sort of break-up, some massive crisis in the Eurozone, do you think that that would affect Britain's prospects, as in its own credit rating, the viability of its own banking system? I mean, obviously, we all recognise there'd be short-term massive pain, maybe another recession, but do you think it would actually undermine Britain's longer-term prospects?
Yeah, I think it would. I mean, again, you can draw a line between there are more minor crises where the UK may benefit again from safe haven flows and so on, because it reinforces the fact that the UK is in this more solid position fiscally. But the fact is the economic and financial interlinkages and banking interlinkages between the UK and the euro area are so strong that if something's fundamentally bad for the euro area, it's fundamentally bad for the UK. And I'm sure that will be reflected both in financial market movements and in the behaviour of the real economy over time. I think it's one of those things. It really is a very material risk, because the hit to the UK could be very serious indeed.
I think, without a shadow of a doubt, I mean, even the modest forecasts for economic growth upon which our fiscal projections are predicated assume pretty strong growth in net exports. We're basically assuming that exports are going to, in one way or another, exports directly and also investment in export-orientated bits of the economy are going to account for a much bigger share of economic growth than has been the case for a very, very long period of time in the UK. Now, a profound dislocation in the Eurozone, perhaps not even just stagnant growth in the Eurozone and ongoing instability is going to have a bad enough impact on the likelihood of us being able to pull that off, given that
but that again is short term.
Well,
I'm talking about our rating, the future for our
I'll come to that,
sector.
but basically, given how much of our growth presupposes strong net exports, and given how important a market the Eurozone is, and given the likelihood that even on the best scenario they're going to stagnate for years, but more likely we're going to have a full-blown crisis, then I think our forecasts for economic growth and hence the public finances look very rosy, very optimistic. If it transpires that growth is weaker and far less progress is made on consolidating the UK's public finances, then I think a downgrade is given. I don't think Britain has much chance at all of retaining AAA sovereign credit.